Good morning. You are listening to First Title National Real Estate Radio Show. I am your host, Doug Dennison, and we are broadcasting from beautiful St. Augustine, Florida, the nation's oldest city, at WFOI 1240 AM studios. Through the power of the internet, this program is being streamed worldwide on 1240news.com. The show will also be archived on FirstTitleServices.com and TitleCompany.com. First Title is a leading national title agency and are the sponsors of this program. Additionally, this show will be posted on YouTube.com. Our radio show mission statement: to provide an educational experience for listeners in a promotional format for real estate sales across the country. We're going to be talking about real estate, different real estate markets across the country. We've got a lot of topics today. Help us out. We've got a couple people calling in. One from Massachusetts in the Boston area. Give us his perspective of that area, and the other in Florida, but works nationwide, and looking forward to hearing about that. Our guests are VIPs in the real estate business, and we're thrilled to have them on. Our listeners are a mixture of real estate brokers, real estate investors, real estate media, government officials, banking officials, bankruptcy officials, and also the general public. And so when we talk to our guests, we try to basically get all that information out to you so you can hear about it, learn from it, and be able to contact them if you'd like to speak to them. We've got a couple interesting things today. I wanted to talk to you again about the fact that a couple weeks ago, believe it or not, one of our guests was telling me that they were calling somebody from Switzerland, and because they're a client, and the client was saying, "Hey, I heard you on 1240news.com on that radio show," and that's pretty impressive. Switzerland is listening, and hopefully you are too out there, throughout the country, throughout the world. Our first guest is going to be from the Boston area, a good friend of mine, Robert Shapiro, and I'll give him some intros as he's going to be calling in. He's the Executive Vice President and CEO of Waterford Development, which he founded back in 1995. The company has permitted and developed and sold over 1,000 luxury apartment units, 500,000 square feet of office space, 200 single-family homes, and 500 condominium units since its inception. Big company, does a lot of work in the hotel, motel space throughout the country. I met Robert Shapiro, Bob Shapiro, probably 5 or 6 years ago. He has an auction past. He actually took care of the auctions for many of the government businesses through Larry Latham Auctioneers. And again, this was probably in the late 80s, early 90s. Sold really tens of thousands of properties for the government, including FDIC, RTC, Fannie Mae, HUD, and a host of financial institutions, including Bank of Boston, Shawmut Bank, and First New Hampshire Bank. So good guy, and hey, let's see if he's on the line. Good morning, you're on the air.
Yes, good morning, Doug. It's Bob Shapiro. How are you?
Well, I'm fine, and thank you for calling in. I was just giving you some kudos as an intro, and but tell us a little bit about yourself. Where are you from, and what do you do, Bob?
Well, I've been originally from the Boston area and still here. Our offices are based in Needham, Massachusetts, and we primarily focus on I would say the New England to New York, New Jersey corridor. If we can't drive to something, we don't typically want to do the development because we like to be very much involved in our projects.
Okay.
Waterford Development has been in business since 1995. We are currently focused on limited service hotels, of which we are currently involved in about 10 or 11 of those. Previously we've built, I would say 1,200 apartment units, the occasional office park, and probably about 200 single-family homes and some master plan communities that we've done. So that's a little bit of background of what we're doing. We also have a consulting side of our business in the resort and ski industry in North America and Canada, where we do work for individual resort properties in terms of, it could be operations, it could be disposition. We've used the seal bid method of auction marketing and in order to create value and maximize value in terms of the disposition process. But it's pretty. I would describe us as entrepreneurial, opportunistic developers in the areas of focus that we really have expertise.
Well, again, I was talking about who listens to this show, and although there's many real estate investors and banking officials and real estate brokers, for the general public, what does it mean by a limited service hotel space? What does that mean? And give me some names of brands that would kind of fit in there.
Oh, okay. Well, we call it focus service hotels.
Okay.
And effectively, the brands that we are most focused on is Marriott and Hilton brands. Marriott Residence Inns and Homewood Suites are a good example of what's in a lot of our portfolio. We give people a very high standard room, something that they would expect in a boutique hotel, with a full kitchen. And typically what you have when you have a limited service hotel, and I think that the official word is focus service, is you don't typically have restaurants. You give people a good breakfast. You give them a courtesy meal probably 4 nights a week if they'd like that.
Mm-hmm.
We do have bars in our hotels which are really aimed at as an accommodation to the people who are staying there. But the idea being that you can give people a great space and a very good value for money, and a very comfortable environment. So particularly for the extended stay audience, it's nice to know that, excuse me a second.
Sure.
I think that was a sneeze, but
no problem. Hey, this is live radio. We understand that.
Nice to know that you can go out and shop. I mean, we will often shop for people, so groceries, etc., will be in their rooms when they get there. So it's meant to be more of a home atmosphere. Typically our average stay is in the, call it, 1 to 4 day range, although we do have people that have been in our hotels for as long as 6 months on either extended projects or people coming from, moving to an area with their families, et cetera. So it's a very good product niche. We like it very much because it's efficient and you don't carry the overhead of conference facilities and the fixed cost of restaurants and things that you see in a lot of full-service properties.
Well, again, as you know, I am from the Boston area, New England area, and grew up there and love the area. And so I was up there a couple years ago for kind of a family reunion and stayed at one of your places in the Portsmouth, New Hampshire area, and it was very nice. Service was great, and I didn't find out until later that you had actually built it. So, again, kudos to you, and very nice brand, very nice accommodations, very nice service. So you do a good job. Tell me about the real estate market up there a little bit, Bob. We get a lot of calls from across the country. We had New Mexico calling in. We've had Texas calling in, Florida, of course. what's happening in your area?
Well, let me give you some overview.
Cool.
I mean, as far as the residential market is concerned, we've seen a very significant rebound here. After the surviving the Great Recession.
Yep.
We're now seeing houses coming on the market in the greater Boston area and selling in a day with multiple offers, often over the asking price. So we're up about, I'd say, 12% this year in terms of year over year. So that's been very significant here. As far as the commercial real estate market is concerned, Boston happens to be one of the top 5 markets for the institutions, and as a result, things like the multifamily, the apartment pipeline here, in my opinion, have gotten very much overheated. I don't know if your audience understands cap rates, but basically what a cap rate is, the lower the cap rate, the higher the value of the property. And for example, if something is trading at a 10 cap, that would mean that in the first stabilized year that people would expect to be making 10% on their money in terms of a rate of return. Apartments here now are being pro forma'd at 3.5 and 4 caps, selling at extremely high prices. We actually believe that is the top of the market, and frankly, as a developer, when you're largely going to be relied on for personal guarantees in terms of not only completion but some level of recourse, if I'm going to make 3.5% of my money, I think I'd rather buy Exxon stock and collect a dividend. So that is a market that is not of interest to us, and I think what you'll look at if you look at some of the major REITs in that market, like Archstone and Avalon, you'll see that they're selling more property than they're buying at this point to try to take advantage of that curve. And that's actually worked very well for them, because what they've effectively done is sold their older properties at very high prices and effectively turned their new inventory by building up into the marketplace. That works for somebody that's publicly traded with a lot of money. That certainly doesn't work for an individual developer.
Well, that's good information. You and I also have a past history of doing real estate auctions. Tell the listening audience of your background there, if you would.
Well, I was the president of Eastern Operations for Larry Latham Auctioneers, and in the period during the savings and loan meltdown, we sold an awful lot of property, probably on the order of well over $1 billion worth of property, with the federal government as our biggest clients, but also people like Fannie Mae and Freddie Mac and a number of banks and private developers. It's a very effective means of marketing property, and one that is certainly finding more traction today, and one that we recommend to our clients on the consulting side, particularly when you're dealing with specialty and resort properties. The sealed bid auction methodology is very effective that way. And one of the things that we are very focused on, particularly in the ski industry, is that we create value for our clients. We're not liquidators. The idea is to maximize the value and to help people make good business decisions. And the auction methodology can be very effective in doing that. Particularly in the world of what's changed since we were very much involved with open outcry auctions is the internet now is such a huge percentage of your marketing focus.
Yes.
That it really allows you to be extremely effective in a very broad outreach for a lot less money in marketing dollars than you would traditionally have to spend when you were reliant on print media.
Well, you're right, and if you remember back in those days, we would make up these great, big, expensive books, and then have to mail them out, and a lot of cost and a lot of time in there. And of course, in the internet now, I mean, it's not quite as simple as a push of a button, but it is so much quicker, it is so much cheaper, and it really enhances the auction method because sellers are saying, okay, well, if it's only going to cost this, then, I'm in as far as marketing. I thought it would be much more. So that's a big change in the auction methodology, and of course the internet has changed our entire world, as you know. Tell me a little bit about your ski resort operations. I know your partner Murph Yule is one of the highly credible people, experts in that field. You go everywhere. Are you being hired by banks to look at these ski resorts and tell them what to do? What kind of situations do you get in, Bob?
A lot of our clients are banks, banks or hedge funds who may be considering a major investment where we may be able to do their due diligence for them.
I got it.
Murph Yule is certainly one of the ski gurus in
Yes.
terms of having enormous experience, having sold or operated 45 different ski resorts
Wow.
over the really the last 15 to 20 years. We do have the ability to come in and physically operate a resort for a lender, and then again help them reposition it and look for an exit strategy. Sometimes it's banks. We've done a bunch of work for some of the major New York banks. One of the things that we did initially was we did the original valuation for a big hedge fund out of New York called Fortress Investments when they took Interwest private, and did the original valuation there for them. And on the other side of things, we sat around the table with people that were buying the Interwest debt in terms of giving them advice and being involved with them as well. So it's pretty diverse. That industry, the National Ski Area Association, is a very plays a very important role in that business, and the business certainly has its challenges as well as its growth. I mean, it is definitely reliant on Mother Nature.
Yep,
And,
yep.
This year was a good year for the industry. Last year was a disastrous one. So it really depends on a lot of things. With global warming, there are an awful lot of challenges now because properties in the West that used to get 450 inches of snow a year are now getting half that amount. We've seen projections here in New England where, some places like they're predicting places like New Hampshire may only have 6 or 7 active resorts by 2030 because of what's happening with the weather patterns.
Wow.
So there's a lot of major changes that have been happening in the business, and the consulting part of the industry is intellectually very stimulating, and the business tends to be populated with very nice people. So that part of it is enjoyable. Nothing you're going to retire on, however.
Give us your crystal ball for the New England area. Residential, then commercial, still going upwards. Are we going to see any kind of fall off? Is it going up too fast? Will it even out? What's your take?
Well, on the residential market, I think that you've got a good 3 to 5 year run. There's an awful lot of pent up demand. While you've certainly seen a spike in interest rates over the last couple of weeks of as much as 75 basis points, if people had told you that 4.5% mortgage, 30-year mortgages was a high number, 5 or 6 years ago, I mean, they'd look at you like you were crazy.
Exactly.
So rates are still low. I think that some of the increase in mortgage rates may temper some of the fast appreciation in values, but you have an awful lot of pent-up demand, and the market was enormously depressed from, call it 2007 through 2011. So I think you've got some very rational recovery, and even with the appreciation in prices, we are still probably, I would say 15 to 20% below, where the prices were in in 2006 and 2007.
Yep.
As far as the commercial market is concerned, timing is everything. I think, as I said to you earlier, I think multifamily is a bit overheated, and I don't think that you're going to see the rent growth that people have been projecting. If you remember, as recently as a year ago, the talking heads were basically saying that nobody was ever going to buy houses again, and that always, it's a cyclical business.
Yes.
The people that own apartments continue to push the rents, and when it gets cheaper to buy, then people buy houses, and because they think that that that's obviously a better investment. I mean, you've got things being built in downtown Boston that are pro forma at $5,000 a month rents. I just don't see that being a market that is endless in size, which
Sure.
is where you see some of my skepticism.
Yep.
On the hotel development side and in the office market, yes, it is a cyclical business. I would think that you've probably got 3 years to build things right now. We've been active for the last 2 years in construction.
Mm-hmm.
You want to be building at the bottom of the market. I think you have probably 5 years to exit if you're looking to sell property.
Okay.
And typically the institutions will be paying the highest prices at the top of the market, and that's obviously, again, as a entrepreneurial developer, that's the time to get out. So I would say, as far as this part of the world is concerned, and obviously geopolitical things are hard to project, but
Yep.
I would tell you 3 years to build, 5 years to sell on the commercial side, and I think we're getting back to a more normalized real estate cycle as far as residential is concerned.
Bob, you are always a great interview. How do people get hold of you and contact you?
They can contact me by email at rshapiro, Shapiro, at waterforddevelopment.com. Waterford Development is 2 Ds in that. Or they certainly are welcome to call our offices at 781-449-7380, and we'll be happy to talk to them.
Well, Bob, thank you so much for being on the show. Give my best to Murph. Also want to give you a raise for all the work you do for the National Multiple Sclerosis Society. You've been a big cheerleader and promoter for that for years, and you do a wonderful job. So,
well, we appreciate the support that you and your colleagues have given us. In fact, we have our Boston to Provincetown ride this weekend. We'll be riding about 2,500 people, hopefully not in the rain. So I'll be riding 180 miles on my bike this weekend, and we're hoping to raise on the order of about $2.6 million for this ride. So we're making good progress in finding a cure for MS.
Good for you. Bob, thank you so much for being on the show. You have a wonderful weekend.
You do the same. You take care.
You
Thanks
bet.
so much, Doug.
Bye-bye. All right. That was Bob Shapiro, Executive Vice President and CEO of Waterford Development Corporation in Needham, Massachusetts. Longtime friend, very knowledgeable in that area in the limited service hotel space. We're going to go for a quick break, and we will be right back. All right, we are back. You're listening to the First Title National Real Estate Radio Show. This is Doug Dennison. I am your host. We broadcast every Friday live from beautiful St. Augustine, Florida, the nation's oldest city, at WFOY 1240 AM studios. The station is actually going through a bit of a renovation. They are going to go FM along with the AM stations. I'm kind of looking out right now at the big tower next to the radio station, and they're working on that. I am not sure if we will be cut off while they're doing this kind of work, but we're going to pretend we're still on the air, and I'm going to pretend that everybody's still listening and that we do not have a break, but I am not sure, so my apologies. Again, this is Doug Dennison. You're listening to First Title National Real Estate Radio Show. I am your host, and We just had Bob Shapiro on the line. He is the CEO of Waterford Development in Needham, Massachusetts. He did a great job talking about kind of his specialty, which is limited service hotel locations along the eastern seaboard in underserved locations. They do things in New Hampshire, Massachusetts, Connecticut, Maine, Vermont, all through that area, Rhode Island, and do a fine job. And I have been at some of their hotels and nicely done, good construction, and so kudos to him and his firm. He also is a partner with Murphy Yule, who is, as Bob said, a ski resort guru, and has either ran or sold 45 ski resorts, and does a great job on that. And we are thrilled that they were on the line today, Bob. He's also talked about his role in the National Multiple Sclerosis Society, and he's a big proponent of that organization. I think he told me that they're doing a bike ride. And all right, let's go to our next caller. Good morning. You're on the air.
Morning, Doug. This is Lewis.
Well, Lewis, how are you doing, sir?
Doing fine. How are you today?
Well, wonderful, wonderful. Tell us who you are and where you're from and what you do, Lewis.
Well, my name is Lewis Fisher, and I run the national platform, or I should say I am the champion or ambassador for Sperry Ness Auction Services, which is a nationally recognized commercial real estate brand that has augmented and integrated into their traditional brokerage a auction services platform, and I have been involved with them since November of 2001, and I live in the beautiful city, as you, of St. Augustine, Florida.
It is a beautiful city, and we're very lucky to enjoy the lifestyle that this area affords. I have been, and again, you and I have worked together for, 15, 20 years, and it's been a thrill for me to kind of work with you. We did a lot of government work, and that's not just financial institutions, that's not just government, FDIC type of things. One of the things that you have a specialty in is bankruptcy auctions. So can you give us just a little bit on what happens, and then I want to hear about your two recent success stories, one in Maryland and one in Colorado. But we have the general public, a various range of knowledge from real estate people, but most people do not know the bankruptcy structure, the bankruptcy core, and what goes on. So give us a summary of that, if you would.
Sure, I'd be happy to. The United States Federal Bankruptcy Court was formed just shortly after the Great Depression.
Okay.
And I think what most people perceive the bankruptcy court's duty as is to protect collateral that someone has a secured interest in. In other words, a bank or an equity fund or a hedge fund loans money to a borrower, and that person, that borrower, for whatever reason, becomes financially stressed and challenged, and typically would enter into a bankruptcy filing, normally a Chapter 11, designed to specifically try to reorganize their structured debt. But the bankruptcy court has been formed specifically not for the secured creditor, but for the unsecured creditor. The unsecured creditor normally is the little guy that might have performed work on that asset or that collateral, and just not having the, experience to know that they need to file a mechanics lien in order to get paid, those kind of things. And there's all kinds of unsecured creditors depending on the case and the complexity of a case. But the bankruptcy court sits there to adjudicate and to provide they're going to get paid for what they've done.
Okay. Let's go to some real life auctions that you've recently done. You did one in Maryland, which was a bankruptcy auction. Kind of give us the story on that, if you would.
Yeah, it was a very nice operating retail center in the eastern shore of Maryland, specifically Salisbury, Maryland, where they have it's a college town, Salisbury State. One of our very dear friends, Bernie Moyle,
Sure,
is an alumni and graduate from there. This center, this retail center, was anchored by Outbacks. It had Talbot's as the tenant and some very, very nice, nationally recognized triple net lease tenants that retail investors like to see. The person who was the debtor, or the person who entered into bankruptcy under a Chapter 11, which typically means the debtor in possession, had some inefficiencies with operating, et cetera, and so the lender was beginning to foreclose on the loan and to acquire the asset through state court.
Mm-hmm.
And the debtor entered into a Chapter 11 filing, which basically then trumps the state court. Federal court is bankruptcy. State court handles foreclosures. So
Okay.
in this particular case, there was a trustee appointed for the benefit of all creditors. So the trustee came in, hired a property management firm, stabilized the asset relative to making sure that the rents were collected, making sure that any deferred maintenance was addressed, things of that nature, preserving the asset until the lender, the primary lender, which was a special servicer, C3, being the one who serviced that particular loan for the lender, decided they wanted to do an auction, and so we were solicited among three other firms, national firms, to submit our RFP. And the way that we approach our RFP is to use our bankruptcy background, specifically under the 363 code, that enables a property to be sold free and clear of all liens, and those liens attached to whatever proceeds the sale generates. And so we entered in January. We were appointed by the court, and we started our marketing plan, and that worked very effectively and well. We tied up with a Sperry and Ness broker there in the Salisbury, Maryland area, who is very deep and experienced there and very well known. And the end of the day, on March the 26th, we had to having the live auction in court, and we had 9 qualified bidders who had posted the $200,000 and showed proof of funds to close. 4 of them were in attendance in the court, where I conducted the sale with my partner, Dave Gilmore, and 5 attended by our internet bidding platform. And the sale started at 4.2, which was the highest initial offer we had received, and it escalated to a sale price of $5,925,000, which represented a 7.7 cap on existing income.
So you actually did the auction inside the bankruptcy courthouse?
I did it inside the actual judge's chambers.
Judge's chambers.
Presiding judge and over this case. That is correct. Wow.
Okay. And they allowed the fact that there was not only bidders coming in, but also internet bidding, and that has kind of been new to me. So I'm very interested in that. Tell us a little bit about that, because I know that you go into those courtrooms and there's a lot of security and a lot of people looking at you, making sure you're doing everything right, and to be able to bring in a computer is a pretty big deal based on my past.
Well, you first have to start with the clerk of the court, who then has to work with the GSA, because the GSA normally is the property manager for any government building in the United States.
Okay.
So getting permission usually is challenging, depending on who makes application for the request. In this particular case, the trustee, who's a court official, and then we, by way of being appointed by application, are also a court official. And so because we made requests 30 days ahead of time, it gave us the time to work out the nuances about what you're talking about, the security, how we get cleared through there.
Sure.
But today, the technology is so advanced, Doug. I mean, literally, the camera is about 1.5 inches in diameter, and it just sits on top of a laptop that Dave opens up. And we had basically had two ways to access the internet. We had it through the court, and we also brought our card that allows us to hook into the internet, and it worked very effectively. As a matter of fact, the backup bidder was not present in court. They were at $5,900,000, and they were bidding by the internet from a level of about 4.6 in $50,000 increments all the way till we concluded the sale.
Well, that sounds like a home run. Tell us about the recent Colorado one. You go all across the country, and Sperry Ness has offices and advisors all across the country. Great firm. But tell us about Colorado bankruptcy auction.
Yeah, so Colorado bankruptcy auction. Here again, I have had the privilege, Doug, of working in about a third of the districts in the country. And so this particular sale emanated from an advertisement that the debtor responded to, just in general, about our services.
Mm-hmm.
And here again, we were solicited for an RFP, and we wrote and responded after doing our on-site evaluation analysis, and were selected here again by the debtor and approved by the court. And we ended up doing the exact same structure as we did in Maryland, where it's actually a two-tier process. We structure these sales because the bankruptcy court likes to have at least an idea of where what's the threshold, what's the worst case scenario. And they usually do that through what's called a stalking horse. A stalking horse bidder is someone who comes forward and says, I will pay X, I will pay all cash,
okay,
and I will close for that number. As a matter of fact, I will put money up hard in escrow, and I will allow you, whoever is in charge, the debtor or the trustee,
mm-hmm.
to go and do your marketing, and if someone outbids me, I have one of two things to do. I have two choices. I can either increase my bid if I elect to do so and compete to the level that I want to and even acquire it, or I don't have to bid at all. And for bringing that about, meaning the worst case scenario, they are paid, if they get outbid, what's called a breakout fee.
Mm-hmm.
And that breakout fee is negotiated. It can be in a percentage or it can be a flat fee. We went down the path of trying to get a stalking horse in place for this one in Colorado, and we had an objection by the second secured creditor, and so we backed up and punted, and we went down the road just like we did in Maryland, where our structure is that in order to be a qualified bidder recognized by the court, a person by a certain date must submit to the debtor's counsel
mm-hmm.
a certified cashier check or wire transfer for $200,000,
okay,
a financial statement, or some form of proof that you have the liquidity and the ability to close the transaction at whatever level.
okay.
Number 3, you must fill out your initial bid, which is an irrevocable offer at whatever price point you wish to put in there, realizing that you cannot alter that contract, and that must be a document that's submitted simultaneously or in advance of the deposit. And you have to sign an affidavit as to whether you are or you are not an affiliate of the debtor or the management company who's operating that asset that we are in charge of disposing of. And there's other documents that can have to be that you may have to submit as well. That's a bidder's package that we put together. That has to be fully completed. It has to be submitted on a certain date, at which time we, with the debtor's counsel, typically will open those, and we will go through there for compliance purposes to make sure that everything is dotted and everything is crossed, and we will then make a decision as to who and who is not a qualified bidder. Now, the overall objective is to have as many bidders as possible, so it's very rare that we disqualify as long as someone has followed the process as I've outlined.
Right.
And then at the live auction, we start the bidding literally at the highest one who's been submitted previously by that date that I just mentioned. And it enables the court to do a couple of things. It enables to predict, number one, how many are going to be interested in bidding and at what level
mm-hmm.
they're interested in bidding.
Mm-hmm.
So it enables the court to have a little bit more of a clear picture of the final outcome. And normally we find that it works very well. It's a streamlined process. It fits very nicely within the 363 code, which is a federal code. And we find that the buyers might not be happy about that process. But at the same time, when you're looking at an asset and paying 3.6 or 5.9 or 10 million or whatever the case may be,
Right.
you have to realize that there is structure, particularly in court-related cases.
Well, I always kind of thought, and again, I've been in the auction business not quite as long as you, but for about 20 years, and I always thought bankruptcy auctions, not as many people knew about them and were a little afraid of them compared to the regular sale process or the regular auction process even. And therefore, I always thought it was a great opportunity for investor, because maybe they just wouldn't have the amount of competitive bidding, and so that they could get a deal. And so I always try to push investors who, were thinking about, where's my best deal, because that's what they're looking for. They're looking for, good return and a bargain. And I think bankruptcy auctions are a place to go and get involved. You don't always win, but there's value there and a good opportunity for investors. How can people get a hold of you and Sperry Van Ness and find out about all these auctions that are happening, and maybe even contacting you if they would like to utilize your services, Lewis?
Well, the easiest way, of course, is today is electronically, and that can be either by visiting our website, which is www.svnauctions.com,
Okay.
or my email is Fisher, Fisher, no C, the letter L, at svn.com. As to the interest level, Doug, that you mentioned about an investor, the unique thing about the bankruptcy process is that it enables an investor to be able to buy the asset free and clear. In other words, if the debt stack exceeds the amount that is generated for the sale, it can still close free and clear. So you're not buying it with any liens. It's like taking a dirty white shirt from playing in football and putting it in the washing machine with Clorox and pulling it out white. It cleanses title like nothing else that you're able to do.
Well, very good. And one point I wanted to make: are real estate brokers available to talk to their potential buyers and actually get a piece of the pie? Can they participate?
Yes, they can. In the one we did in March in Maryland,
Yeah.
there was a 1.5% buy side fee. So a broker represented the buyer and was paid 1.5% of that $5,925,000 purchase price at closing. And last week in Colorado, the winning bidder had a broker who is going to earn 2% of that $3.6 million number that we were able to achieve in court on that particular asset.
So this is like value added if you're a real estate broker out there. You've got people that are looking for buys and for bargains and for select properties. If you're a real estate broker and can get your head about what's happening in bankruptcy auctions and government auctions, I think this is a great service to your buyers, and you're going to get paid if your buyer buys. So a win-win for real estate brokers out there. And I don't think that they know that. I think the general public or the broker doesn't really know that there's this great opportunity for them.
Well, and that, here again, it tends to fly under the radar.
Yep.
But with the commercial mortgage-backed securities that are coming due, when a lender pushes on a borrower to put additional capital down because the appraised value comes maybe below their percentage threshold of loan to value, then there's an issue of what the borrower is going to do. And a lot of these borrowers have operating businesses, operating assets. It's just that through all of this commercial mortgage-backed securities, when they were originated 5 or 7 years ago, the values were different than they are today. So the bankruptcy court allows that to sort of be reorganized, restructured through a very, very specified sale process. And so it's in my opinion, I obviously like it, and
Right.
I'm certainly, biased, but, the state court, we work a lot for receivers, but state court is different. There's a lot of similarities than bankruptcy. Bankruptcy is federal, and that's the thing, is being able to understand that 363 code as an investor.
Tell us a little bit about Sperry Van Ness, big company. Tell us a little background and where they're located across the country.
1,400 advisors,
Wow.
150 major markets, coast to coast. The company was founded in 1987. It is literally the only commercial real estate franchise brokerage firm, investment brokerage firm, that has a spirit of collaboration and cooperation. By that, what I mean is there is a core policy that every franchisee abides by, and that is to share their commission equally with the buy side, whereas in commercial real estate, that is not done. In residential, it is. You see where MLS is used, the listing agent gets paid and the buy side agent gets paid. In commercial, most of the time, the commercial agents double in the deal. And Sperry Van Ness has sort of penetrated that space, one of the top 10 recognized commercial real estate brands in the country, and on some cutting edge of a lot of different things. They were the first commercial real estate industry to actually integrate and augment the auction services platform within their brand.
Well, I think that is a big differentiator. Basically, it's better for the client if you, as a real estate broker, as soon as you get that listing, tell the world about it, rather than let me look and see if I've got any buyers, in my hip pocket, and then I'll tell my friends next door, and then I'll get it out to the company, and then we'll put it out to the rest of the world. And you always want to bring as many people up to snuff as far as what the possibility and the opportunity is, and you want to do it as quick as possible, because the quicker the better.
Well, there's not one brand who knows every buyer in the world. And
Are you sure? Are you sure? I've talked to them. I think they do believe they know every buyer.
There's a lot of them that say that and claim that, but it's literally impossible. And so, I think that if you look at the transactions within Sperry Van Ness, literally every, I would say 95, 97% have a buy-side broker, and more than half are with other agencies or other brands outside of Sperry Van Ness. So it's a very unique thing that Sperry Van Ness has plowed into the commercial real estate space, and it's been well received. I mean, a lot of brokers like working with us, and we like working with them because, quite frankly, we can't know the various markets specifically when you're working nationally like we do. We have to rely on the brokerage in the brokerage community.
Well, I'm just very pleased that you were able to take time to be on the show. Just, I know you're very shy, so I can do this for you. You have sold more than $1 billion worth of real estate through the auction process, including 13 federal bankruptcy court districts, FDIC in probably 8 different offices, the RTC in probably 9 different offices, FSLIC, Fannie Mae, the Farmers Home Administration, the Department of Defense, the Small Business Administration, General Services Administration, U.S. Marshal Services, City of Miami, City of Northport, City of Miami Beach, Sarasota, Broward County, and the state of Michigan. So you are an expert in the field, and people should really contact you if they're looking for the best auctioneer. You're in Florida. You've been a Florida champion auctioneer 3 times. Tell us once again how people can get a hold of you, Louis.
The best way, Doug, is by email, and that's Fisher, Fisher, the letter L, at svn.com, or visit our website, which is svn.com, or our svnauctions.com. And you talk about all of that about the government. I guess I'm just a glutton for punishment. But, you and I have done some very strategic things in the government together, and I have always always cherish those times when we work together.
Well, buddy, thank you so much for being on the show. You have a wonderful weekend.
You do the same. Thank you, Doug.
Bye-bye. All right. That was Louis Fisher from Sperry Van Ness Auction House, and a great interview, as always. Really an expert in that field. Folks, I want to thank everybody for calling in, and we will be back next week. Take care.